Over the agenda here for today's session. We'll do a quick overview of the Form 700. We will talk briefly about the annual ethics training and sunshine ordinance. We'll talk how to log into NetFile, how to fill out your Form 700 and take both of the required trainings. We'll go through each schedule and provide examples on what's reported on the Form 700. We will provide resources and filer support links. And we also do a Q&A session. So with that being said, let's go. All right. Okay, so per the Political Reform Act, state and local agencies must adopt a conflict of interest code that identifies all officials and employees within that agency who make government decisions based on the positions that they hold. Individuals who are designated in the conflict of interest code who are identified as making or participating in making government decisions must disclose their financial interest as specified by their position's disclosure category. These disclosures are made in a form called the Statement of Economic Interest, which is also known as Form 700. Annual statements of economic interests are required to be filed by public officials and designated employees throughout California each spring, which is the topic of today's session. Additionally, the Form 700 must be filed within 30 days of assuming office and within 30 days after leaving office. This form provides transparency and ensures accountability in two ways. First, it provides necessary information to the public about an official's personal financial interest to ensure that officials are making decisions in the best interest of the public and not enhancing their personal finances. Second, it serves as a reminder to the public official of potential conflicts of interest so that the official can abstain from making or participating in making governmental decisions that are deemed a conflict of interest. So, who files the Form 700? This session is geared towards elected officials, department heads, board members, and commissioners, also known as ethics filers. So if you hear ethics filers throughout the presentation, I'm referring to elected officials, department heads, board members, and commissioners. There's also a session that we had last week, and that is for designated employees and consultants. These are just employees that are part of pretty much all city departments. And all filers, no matter if you're a designated filer or an ethics filer, complete their statement of economic interests online in a filing system called NetFile. So all of these are e-filed. Now let's talk a little bit about the annual ethics training and annual sunshine ordinance training. Both trainings are located within the NetFile system. So when you log into your NetFile account, not only do you have to complete the Form 700 under the filings to complete section, but there's also two separate trainings. One's the annual ethics training and one is the sunshine ordinance training. You take the trainings there within NetFile. It's not in SF Learning, or there's not a link on our website to it. It is in your NetFile account. The deadline for both trainings is the same as the deadline for the annual ethics training, which is April 1st, 2026. Please allow 1 to 1.5 hours to complete each training, and they both consist of videos, short quizzes, and a declaration form to sign. Kyle, please enter the links for the ethics training workflow and the sunshine ordinance workflow in the chat. The links that Kyle is adding are step-by-step workflows on how to get through each of these trainings, like starting from the beginning, like you're not logged in, what do you do to log in, and then it will go through it each step. I just want to remind everyone, since this is fairly new, these used to be one training together, but as of last year, they are separate trainings. And so it used to be like 2.5 hour training. Now it's one annual ethics training, which will take about an hour, one sunshine ordinance training, which also takes about an hour, but they are separate. So it's still fairly new, but just a heads up for everyone. All right, so for this slide, we're going to talk about due dates. When you assume office, which means when you start your position, you have 30 days to complete your Form 700 and both of your trainings. Form 700 is a 1-year look back from your assuming office date, but we also have an annual Form 700, which is the basis of this session, and the due date is April 1st, as I previously mentioned. The annual filing covers the year before, so it's just like filing taxes. So the 2026 Form 700 covers calendar year 2025. So January 1st, 2025 to December 31st, 2025, that's the time frame that your annual Form 700 will cover. And if you ever leave office, once you do, you're required to file a Form 700 within 30 days after leaving office. As I mentioned before, the annual filing and both trainings are in your NetFile account. They are available now, so you could do these at any time. And just a quick note that if you assumed office between October 31st, 2025 and April 1st, 2026, and you filed the assuming office Form 700 and took your required trainings, you do not need to fill out the annual Form 700 this year. You would actually have to do it next year. So if you actually happen to log into your account and see a training and a Form 700 in there, or see both trainings and the Form 700 in there, you just let us know. Please just open a ticket and let us know if you assumed office between the dates on the screen between October 1st and April 1st, because we'll have to take a look at your account and see what's going on with it and if you are required to or not. All right. Okay, so we're just going to walk through really quick on how to file your Form 700 and take the trainings. So you can follow along in a separate tab if you want to as well. You don't have to, but please feel free to. Essentially, you want to navigate to the Ethics Commission website, which is sfethics.org. There's going to, in the middle of the screen, top middle, there's going to be a banner that just says Form 700 and annual training due April 1st, just like you see in the picture. And there's going to be a button that says Get Started. So you just click that button. Take you to another web page. On that web page, which is the Form 700 filers web page, there is a link there that is under a picture of the Golden Gate Bridge, just like you see, and it says Form 700 filers. You click that link, and then on that web page there will be a button that says E-file your Form 700. Doing this will take you directly to the NetFile login page that will look like this. So this is the e-filing system called NetFile. You'll enter your email address, click the continue button. It will ask you for a password. You enter your password. If you do not know your password, that is perfectly fine, because there is a link on the login page that says new user / forgot password. You click that link, enter your email address, and within 1 to 2 minutes, an email will be sent to that address. It is very fast, so if you do this and don't receive an email, please just let us know. I would give it like at most 5 minutes. It should not take that long, but never know what's going on. But yes, just please let us know if you're not able to log in, and you can do that by opening a support ticket with us. I want to just note again that all of these requirements, filing requirements, are done electronically. Paper submissions are not accepted. All right, let's move on. And once you log in, you're going to see what's called a filer dashboard. This is your filer dashboard. It'll have your name on it. At the very top of the page, you'll see your disclosure category. On this picture, it's showing category 1. And there's also a link next to it that says View Category Information Document. If you click that link, it will download the conflict of interest code page that breaks down your specific filing requirements based on your disclosure category. So essentially the definition of your specific filing requirements. Each department, commission, et cetera, could have different requirements for different disclosure categories. So just make sure to read yours before you fill out the form. On this page, you'll also see a section called Filings to Complete. And you'll actually see all of the filings that you have not completed at this point. So the current filings that you need to complete. For this crowd, it will be 3 of them. The top is your annual Form 700, and then you will see the 2 trainings. The second one on this page is Sunshine Training, and then there's the Ethics Training. You want to do these one at a time. So, if you want to start with the trainings, that's perfectly fine, but just one at a time is best. And you just click on the Create checkbox next to whichever one you want to start first, and it will make a little check mark in that box, and then you click Start Selected Document, and you will be on your way. And we're going to talk briefly about how to amend a filed Form 700. So if you realize you made a mistake or omitted something on your Form 700, not a big deal, because you can always file an amendment from your NetFile dashboard. So under the filings to complete, you're going to see a e-filing history. So everything that you've ever filed that's Form 700 related in the NetFile system will show up under your e-filing history. Amendments can be made to current years or prior year filings. Amendments can be made at any time without penalty and should be filed as soon as the discrepancy is known. And it is important, please, this is very key. It's important to amend the relevant year's filing. Especially if you have multiple filings in your e-filing history, just make sure you're clicking the amend next to the correct filing, and you will actually see dates in the created column here. And so like if you want to amend the 2026 filing, you're going to click the amend link next to that filing, not next to the 2025 filing. So we just don't want you to amend the incorrect Form 700. With that being said, I am going to stop sharing really quick and pass it over to Kyle, who is going to talk about, start talking about the schedules. So Kyle, you can go ahead and take it away.
Okay, thank you, Kevin. Wait 1 second while I try to share my screen. Okay. Okay, so I'm going to walk us through the first couple of schedules of the Form 700, starting with Schedule A1, which covers certain types of investments. Schedule A1 focuses on investments where the ownership interest is less than 10%, or the key thing to remember here is that the schedule is about financial interest in business entities. So an investment means a financial interest in a business entity that does business or plans to do business in your agency's jurisdiction. It applies if your spouse or registered domestic partner or your dependent children had direct, indirect, or beneficial interests of $2,000 or more at any time during the reporting period. So some reportable investments would include stocks, bonds, sole proprietorships, your own business or your spouse's business, partnerships such as law firms and a family farm. So now that we covered what is reportable on Schedule A1, let's talk about what is not required to be disclosed. So one thing to remember is that not all financial accounts or assets need to be reported under the schedule. So some examples of some of those things you don't need to disclose would be government bonds, including municipal bonds, diverse mutual funds, or in certain exchange traded funds, bank accounts, savings accounts, money market accounts, and cryptocurrencies. These types of investments are generally not viewed as creating the same type of conflict of interest concerns, so you won't have to disclose them. All right, so moving on. Schedule 2. Schedule 2 is basically used when your spouse or your registered domestic partner or your dependent children, or either together or separately, owns 10% or more of the business entity or trust. So this includes business entities such as consulting businesses, independent contracting businesses, and trusts, even including living trusts as well. Just like Schedule A1, the entity must be doing business and plan to do business in or have done business in the past 2 years within your agency's jurisdiction. And one important difference between A2 is that you support report investments in real property held by the entity or trust. So if your pro rata share of the interest was $2,000 or more, you should report that. So next, we're moving away from the business interest to Schedule B, which covers interest in real property. Schedule B requires you to report interest in real property located within your agency's jurisdiction if the value was $2,000 or more at any time during the reporting period. So one important detail is that real property is considered within the jurisdiction not only if it is physically inside the boundaries, but also if it's located within 2 miles outside the boundaries. And that also includes property within 2 miles of land owned or used by local government agencies. So even if a property is technically outside of city limits, it may still be reportable. Some interest in real property, some examples would be ownership interests, including beneficial ownership, a leasehold interest, a mining lease, or real property held in a retirement account. Basically, in short, if there's a qualifying financial interest in real property within or near your agency's jurisdiction, and it meets around the $2,000 threshold, it should be disclosed under Schedule B. So now that we covered what must be reported in Schedule B, let's talk about what is not required. So you're not required to report a residence that is used exclusively as your personal home, such as primary residence or a vacation cabin. However, there is an important exception in this. If the rent, or if you're renting out or a room in a residence, or are you claiming a business deduction related to the property, then it may be reportable. So the key distinction here would be if the residence is used strictly for personal purposes, and once there is a business or income component, it may need to be reported. So Schedule C, here you're kind of reporting basically your source and amount of income. If you have any income over of $500 or more received during this reporting period, you should report it. Your gross income means the total amount received before deducting expenses, losses, or taxes. So this schedule also includes loans. So other than loans from commercial lending institutions, your most, the thing you must report the most and your income is received by a spouse or your registered domestic partner. So even if your community property share was $500 or more during the reporting period. So some of the commonly reported sources include salary, wages, per diem, and employer reimbursements, including travel payments, commission income not reported on Schedule A2, gross income from any sale, including the sale of a house or car, payments received on loans you made to others. And in short, if you receive $500 or more from a source during the reporting period, that source is likely to needs to be evaluated for disclosure under Schedule C. So now to discuss everything that is reportable under Schedule C, let's briefly go over what's not required to be disclosed. So you're not required to disclose or to report salary reimbursements or per diem or Social Security, disability, or similar benefit payments received by you or your spouse or a registered domestic partner from a federal or state local government agency. Now, stock dividends, and income from a sale of a stock are also not required to be reported unless the source can be specifically identified. Income from PERS retirement account is also not reported under this schedule. So while the Schedule C covers many types of income over $500, there are important exclusions, particularly government compensation and certain stock incomes and PRS retirement benefits. So this concludes the portion of the schedules I will be discussing. I'm going to pass it on to Kevin to talk about Schedule D.
Great, thanks, Kyle.
Welcome.
Let me 1 second. I'm going to share my screen. And we're going to talk about a couple more schedules here that are left. So I'm going to talk about Schedule D, which is income from gifts. So a gift is anything of value which you have not provided equal or greater consideration to the donor. A gift is reportable if its fair market value is $50 or more. In addition, multiple gifts totaling $50 or more received during the reporting period from a single source must be reported. So say somebody gives you something worth $25 during the reporting period, and then later during the same reporting period, they give you a gift worth $35 together, that equals $60. It's reportable. And it is the acceptance of the gift, not the ultimate use to which it is put, that imposes your reporting obligation. So I'm not going to read all of these, but commonly reportable gifts include tickets to sporting or entertainment events, tickets to amusement parks, food, beverages, and accommodations, including those provided in direct connection with your attendance at a convention, conference, meeting, social event, or like gathering. Rebates or discounts not made in the regular course of business to members of the public without regard to official status. And then let's move on to what you are not required to disclose for Schedule D. So gifts that were not used and that within 30 days after receipt were returned to the donor or delivered to a charitable organization or government agency without being claimed by you as a charitable contribution for tax purposes do not need to be disclosed. Gifts from your spouse or registered domestic partner, child, parent, grandparent, grandchild, brother, sister, those don't have to be disclosed. Gifts of similar value exchanged between you and an individual other than a lobbyist registered to lobby your agency on holidays, birthdays, or similar occasions. Say you get your friend a gift for their birthday, they give you one for your birthday. You don't have to report that. A monetary bequest or inheritance. However, inherited investments or real property may be reportable on other schedules, just not this schedule. Personalized plaques or trophies with an individual value of less than $250. All of these are just not required to be reported. All right, so from that, we're going to move on to the next schedule, the final schedule, which is Schedule E. And this is income from travel payments, advances, and reimbursements. So travel payments reportable on Schedule E include advances and reimbursements for travel and related expenses, including lodging and meals. On this one, there's just a list of what you're not required to disclose. Again, I'm not going to read all of these, but travel payments received from any state, local, or federal government agency for which you provided services equal or greater in value than the payments received, such as reimbursement for travel on agency business from your government agency employer. Travel payments received from your employer in the normal course of business of your employment that are included in the income report on Schedule C do not need to be reported on Schedule E. So if you report something on Schedule C, you don't need to also double report it on Schedule E. I think that's about it for Schedule E. We're going to pivot over to failure to file, late filing, and enforcement. So what if you don't file or don't do your trainings or file late or take the trainings late? I know that no one's going to do this, but we need to talk about it. There's no provision in the law to extend Form 700 or ethics training deadlines. Being on sick leave, sabbatical, vacation, just forgot to do it, my internet's not working. These are not exceptions. Like, this is the lesson here is, just please file on time. If you do file late, there are potential late fees. We have an enforcement team here at the Ethics Commission that check on these things. Our job, mine and Kyle's part of our job, is we don't want you to meet our enforcement team. We want you to file on time. So if there are any questions, please just come to us. We will help you in any way possible. We want to make sure that everyone files on time and never has to talk to anyone on our enforcement team. Non-filers also may be subject to disciplinary and or enforcement actions with potential fines of up to $5,000 per violation, or 3 times the cumulative amount not properly reported. In addition, members of boards and commissions who fail to file the required filings in a timely manner are disqualified from all participation and voting on matters listed in their board and commission meeting agendas. So for this group, if you're part of a board or commission and you don't have your filing in by your requirements done by April 1st, say your board has a meeting on April 2nd and you don't have your filings in, you're not required to participate in that meeting, not required to vote. Like, it's just, you just can't show up. And once you have them done after that, you can proceed. But at that moment, if you do not have the filing requirements in, it's just not, you're just not able to participate. All right, I think that's enough of that. Let's talk about some resources really quick. Kyle's going to add some links into the chat. There's the San Francisco Ethics Commission website for filers, has a lot of information on that page. Please take a look. The ethics training workflow, which Kyle already put a link in the chat, but he's going to do it again. Remember, step by step on how to get your ethics training completed. Sunshine Ordinance training workflow, same exact thing except for the Sunshine Ordinance training. And then the final link is the Ethics Commission SEI Form 700 support portal. Essentially, if you have any questions, if you run into any issues, whatever you need, if you want to schedule an appointment with us, all of that, we are here to help. So just open a ticket. We will help you with whatever you need. Like I said, we're here to make sure all filers get their filings in on time, the filing requirements, and just let us know what we can do to help you. With that being said, I just want to say thanks for joining. We will momentarily go to a Q&A session. And yeah, thanks for joining. Again, I just want to stress, don't feel like you're bothering us if you open a ticket with questions. It's totally fine. This is part of our job, so we are here to help. So please just open a ticket with us if you have questions.